Hey, welcome everybody, and thanks for joining us on this episode. Here I am joined by Ryan Gorman. We have a special guest on today. We have George, CEO of Bequant. If you guys don't know what Bequant is, it's probably the closest thing to a capital markets firm on the institutional side in crypto there is. They're doing a lot of stuff, a lot of products dropping. In full disclosure, George is my boss. So I'll say that. It won't make me any nicer to him during the next 30, 40 minutes. But just wanted to let everybody know. George, thank you very much for the time. I know you got a busy schedule, man.
Thanks, Alex. Glad to be here.
So, today's subject is really focused on prime brokerage, specifically for the crypto markets. And one of the things that we've noticed is it's been a huge lack of infrastructure within the crypto markets now that hedge funds and institutional and high net worth individuals have entered the market really predominantly, at the back half of 2017. There's also been a lot of products that have been pushed out to the market, really claiming to be a prime broker or a related type service, but really a lot of them are falling short. I know for a fact with people I speak to, fund managers and portfolio managers, there's really not been that solution laid out in front of them, and they're really looking to have that look and feel of the traditional side. Would you agree with this perception and all the market analysis that you guys have been doing for the last 2 years?
Absolutely. I guess the very important to put the definition straight here, right? So the prime brokerage term roots from the traditional legacy finance space. I spent 15 years in prime brokerage and electronic trading in multi-asset classes and in traditional asset classes. So the prime broker for the market, if we're talking about hedge funds and institutional investor, the prime broker is always a very central figure for the market players. You could have as a hedge fund, you can have multiple brokers, but you always have one prime broker, and this prime broker provides you with the sort of the centerpiece of your trading, settlement, reconciliation, capital intro, and multiple other services that the capital markets offer. So I think that's where we've seen a bit of a gap between the digital asset space, the crypto market, and the traditional space, with the misconception of what the prime broker is, because the market is structured very differently, or has began to be structured differently. We always talked about, decentralization. We talked about, the sort of a peer-to-peer, but what we're seeing is that the institutional space is very much different. There is a need for a centralized figure to clear, to settle, to ensure the counterparty risks are managed and aligned with everyone's interests, and there's efficiency. The capital efficiency is one of the main problems the institutional investors are facing, and that applies to the crypto markets as well.
Can you tell us a little bit more about some of those capital inefficiencies that stem from the fragmentation of the marketplace, not only among service providers, but also among various trading venues?
So it's not the only problem they're facing, but it's clearly one of the most it's the one that we've been talking to our clients the most. Mm-hmm. And the problem stems here from the fact that the spot market, and derivatives platforms require full pre-funding or some pre-funding of collateral to be able to trade. So what you're saying is that, even if the clients are trading a market neutral strategy, for example, right? So from risk perspective, they're flat. So they buy on one exchange and they sell on the other exchange. And they could trade like this all day long as they have the collateral on these platforms. So by having a prime brokerage, prime broker allows to centralize this relationship and basically provide you with the additional capital to scale your strategies, and without increasing the risks actually for anyone in this ecosystem or in this partnership. So the capital efficiency is basically about tapping into a balance sheet of a prime broker to maximize return on investment. That's what the institutional investors need. That's what they report to their shareholders and investors, and that's why prime broker is very critical figure in the evolution of the institutional space in the crypto.
Is the lack of a prime broker or the lack of this type of level of service what you think has been holding back institutional adoption, that wall of institutional money that people keep predicting will come into the digital asset space?
Well, I mean, I can say that, but obviously there's a lot of things that have been holding institutional investors to coming into space. If 2 years ago we were all we were talking about was regulation, so lack of clarity and in transparency in terms of how things are treated. I mean, what do we call a digital asset? What do we call a security? How do we trade? Do we do KYC and all these different aspects of regulation? Now things have gotten much clearer. So now we're talking about availability of the infrastructure for the institutional players to come in, and now we're talking about the possibilities, liquidity, and trading opportunities for these institutional players. So the infrastructure piece is where prime brokerage falls in very clearly. There's beside prime brokerage, and prime brokerage is a lot of different things put together. We've seen quite an evolution in the custody space, and the custody product becoming a sort of a commoditized service in the market. We've seen a number of lending desks that are popping out, in terms of, providing lending services. We've seen multiple different vendors offering different tools to manage collateral, for example, to track your portfolio, to sort of aggregate data feeds and, build the smart order routers and so on and so forth. So all these things combined together, that's what the prime broker does. Plus it puts the balance sheet on the table and provides, leverage to the clients.
Interesting. Now, a couple things. Bequant didn't just start out saying, "Hey, we're a prime broker." It actually evolved, building its product and offering stack up. I can say, it's a very committee-driven business, and from that creates a very solid infrastructure within the company itself. The transition from a low latency spot exchange, which was very popular and still is with the high frequency trading hedge funds and arbitrage funds, that culminated into the prime brokerage product. Do you believe you made the right move in building out all that infrastructure to create the support system for prime brokerage? Because it's not that easy to do from day one.
Absolutely. I mean, by understanding the business, the digital asset space from inside out, and again, running an exchange, and many things, many people think it's a no-brainer job to run a crypto exchange. It is not. It requires a massive resource. It requires a lot of the technical know-how, a lot of procedures, a lot of policies, a lot of moving parts in accommodating, putting a quality product together. So by understanding how things are structured there from the exchange perspective, we knew that what kind of moving parts, what kind of pieces of infrastructure we can extend to do more things, to do more good for the clients. And again, the capital efficiency has been a very clear focus for us since that's what we've been in. I've been in the prime brokerage space, and that's always been the name of the game for for my clients that are trading futures and spot and FX. So this transition or this evolution for us, as you know, having an exchange offering, we build a dedicated custodian with the cold storage offering. We have these technical solutions arm that offers white labeling services. All this put together allows us to put the prime broker offering. And again, there's still a long way for us to kind of get to that the perfect solution, but I think we have achieved quite a bit, and the clients that are we have at the moment are very happy with this solution, and we're getting very, very positive feedback.
In terms of the prime brokerage solution and coming to this point, was this something that was always the goal, like the end game, or is it something that just kind of evolved from providing services to the different ones that you
Same question I was going to ask. I mean, you know, you're very entrepreneurial focused, George, and when you started out going down this path, is this where you thought you'd be in, you know, in 2+ years, or have you learned along the way and evolved with that?
I mean, yeah, we get the appetite as we get into the game. We get our appetite is growing as we. Yeah, the space is so exciting. It's so dynamic and growing. And when you look at the opportunities ahead of us, and we see how the market is transitioning, how the technology is taking over finance, and making things more efficient, transparent, and better for the users. And that's I mean, it's exciting. Obviously, we're not going to stop here by, you know, just offering an MVP sort of product. The idea behind prime brokerage, and again, that's where things may really spin out into a different dimension, really, and be very different from the traditional prime brokers, because the technology allows you to do so many different things, is to become essentially a marketplace for different providers, different services accumulated in the one-stop shop solution. And that stems into, you know, you can basically tie up a custody solutions. You can tie up different lending offers, structured products. I mean, the market is booming with the entrepreneurial spirit. So if you can wrap it up in the one easy to use, convenient, transparent solution, the clients will love that. And that's what we're seeing that with our first steps of putting these things together for institutional clients.
Interesting, and I will point out that a lot of the pedigree at Bequant does come from the institutional traditional side. Do you find that has helped or hindered when it comes to the digital asset space and creating the products? Would you rather have a team that was from crypto or a team from traditional? And also, second part of the question, how have you seen the process done on the prime brokerage side, which I think is a little different than the exchange side, right? So the exchange side, very tech focused, you know, very few people. The prime brokerage side, very service focused, creating more people. So what are some of those compare and contrasts, and how do you feel those have helped or hindered you?
Well, I mean, I can't say that it's, you know, the crypto or the traditional finance concept or approach is better. It's actually an evolutionary process. So what you're trying to take is best of both worlds. I mean, I always give this example. I mean, in the traditional space, when we were offering access to 10 plus exchanges around the world from one account, the core of our team was operational staff. I mean, moving, doing reconciliations, and everything was in the manual, cumbersome process. And the IT departments were pretty lean, I would say. Now the situation is absolutely the opposite, right? So we have an army of IT, and we have zero operations. Nobody's pushing any papers anywhere. I mean, it's everything is streamlined, automated, It's basically provides a full STP from the client mobile phone or from the client screen all the way down through the entire cycle. And again, that's what we're trying to do. We're trying to evolve and disrupt finance, right? So and taking these best things and putting them together is what makes this thing a success.
Very interesting. How has prime brokerage and the execution and I just broadly been moved with the markets, right? So the last couple of months, the market's been a little different than it was the previous 2 months. How do you see that as any applied stress on the products at Bequant, or has it just been running smoothly? What's some of the roadblocks or non-roadblocks that have come up?
I mean, the volatility in any market condition for the prime brokers is should not be of any concern whatsoever. The main issues when there's a structural changes happening or not even an issues, it could be an opportunities for new things to happen or for new products to be born. And again, this evolutionary process is continuing on from day one. I mean, we've seen when we started building the product over a year ago, the focus was on spot exchanges. It was spot that was everybody traded, and shortly after, it was only 6 months since things have changed massively, and now everybody's trading derivatives, and now we're looking at the options becoming a very normal thing that the retail clients would trade. I mean, in the traditional space, you wouldn't be, be as hopeful that your options offering will be interesting to the masses of people, but it's not the case. So I mean, the going forward, I think we may see some interesting developments in terms of the types of products where we've been talking about tokenization of securities for a number of years. It's probably not something that will happen immediately, but within the next 2-3 years, we're going to see a new convergence, a new evolution cycle when the blockchain industry is capable of absorbing the securities industry and providing a much more convenient way of trading, of clearing, settling, raising money, and managing your investments.
Do you see a future in that? Do you see that, Bequant and others in the space, down the road, whether it be 2, 3, 5 years from now, start facilitating tokenized, let's say, securities, fractional securities trading, treasuries even? Do you see the instruments evolving as well through the market in what you'll be handling?
Absolutely. I mean, there's interest from large players on trying to tokenize gold. That's probably something has been on the radar within the crypto industry from early days. We've seen the benefits of tokenization. We've seen the access to the clients into the investor base. It's truly global, and these kind of potentials, and where you're very much limited to a specific region or industry or an exchange for clients, limits anyone's capabilities of scaling the business. Within the blockchain space, as we've seen, it's always been very global, very digital, very mobile, and again, if we're talking about in the current conditions of isolation and coronavirus, I think the digital space have suffered the least of all industries, because we've always been operating in such mode, and we've always been so agile and online.
Good point.
Yeah, you talk about being global, and Bequant does have clients, around the globe. Where have you seen the most demand for this so far, like initial response for a product like this, and where do you expect that demand to evolve into coming from going forward?
Well, geographically, we've always been concentrating around the financial centers in the world. So we are based in London. We have office in Malta. We have office in Switzerland. We have people in US as well. So we are looking to tap into the financial centers and tailor to where the institutional clients are. I mean, traditionally that's been, London, Zurich, New York, and, a few other cities in the States. We are looking at expanding to Asia as well. Singapore and Hong Kong has been leading the space in Asia, but there's been a lot of retail attraction there as well. So these spots around the world will remain its positions in terms of influence and in the new space, but it's the nature of the industry allows us to work seamlessly across different time zones and geographies and build business regardless of where you are. Interesting.
Now, we've been talking a lot about prime brokerage, the product launch, and disruption that's going to do to the space. Do you ever get an inkling for touching the retail market, or doing another facet of the ecosystem?
Well, again, it's when you're building institutional product, you're building the tools for one of the most demanding customers out there. Institutional investors, they do ask for transparency. They want granularity in everything you do, and what it allows is to basically you have all the tools, all the guns. All you need to do is basically simplify things, make it more transparent and consumable by retail audience. And but in essence, a lot of the complex products that are mostly consumable by institutionals will be sold to the retail clients. I mean, we've seen structured products. I mean, that's something that has been tried to be disrupted as well in many forms and shapes, like in ETFs or exchange traded products. I mean, with a token that basically represents a complex structured product within, you can basically easily offer that to retail clients with explaining the benefits, explaining the I mean, there has to be some education coming with this, but yeah, I mean, it's a natural progression for us to explore things that we can offer and bring in retail flow, because again, the synergy between retail flow and institutional is very paramount. I mean, you cannot just have purely an institutional market or purely retail market. You have to have both.
Agreed. And speaking of retail, a lot of those retail flows tend to drive where crypto markets go. In addition to what they do in the traditional markets. Once retail investors, begin to realize the benefits of, same-day settlement or almost real-time settlement, do you think that's going to eventually drive the traditional markets in that direction? And, how long do you think that might take for that to occur?
Or conversely, do you think that a delayed settlement product in crypto is what's going to come?
Exactly. Well, I mean, again, so we're talking about two positions here: the retail customers and the institutional customers. The retail customer cares about the convenience and the cost, probably, right? So the convenience is achieved through a UX UI interfaces and basically looking at how things are structured. I mean, can I use something when I need it? How burdensome is it to get onboarded? How easy to manage, and how easy it is to secure? With the institutional investors, this range of questions and problems is 10x. So you need to look into every different corner and try to nail the questions in a much more granular way. And as every question spins into another 10 questions. So the capital efficiency problem that we've been talking about has multiple different angles there, and one of them is the post-trade settlement as a solution there. right? So, but what does it actually mean? So, the most of the markets in the traditional asset space is settled on a T+1, T+2, T+3 basis. So what it means is that the trade is done, but the settlement happens later. And there's such concept as delivery versus payment, DVP, does not exist in the crypto space. It does exist in the traditional market space because there's regulation, there's infrastructure, like there's a central clearing houses available for different assets and different asset classes. And that's the infrastructure that we're looking to build. Right now, the market is I think we are very entrepreneurial as the industry, right? So we are trying to experiment, and this is a very good thing. So we don't have to apply the same templates that work for other industries or similar industries like FX, for example. We can explore different formats, and sometimes they work even better. But we've seen that, you know, the OTC trading and settlement does support T+N settlement, and we're looking at the more counterparties looking at the sort of centralized clearing for, let's say, for US dollar. Silvergate Signature has been essentially taking over the entire market. They have become the central counterparty for settlement of fiat. So, I mean, it's happening. The infrastructure and the centralization of the infrastructure for the institutional players is happening. So, I mean, I'm sure there's going to be other tools that the industry will invent, and it will evolve into a new model.
Interesting. All right. So I think you're absolutely correct. You know, I've definitely drunk the Kool-Aid on this one. I think it's a huge missing piece. And with all the feedback we're getting, a few questions about you and yourself related to crypto. When was the first time you heard about crypto?
That was Bitcoin, obviously, and that was 2014 or 13. I can't remember exactly. And I had a chat with a friend of mine who was an early adopter and is a well-known entrepreneur in the space now. And I guess my initiation to the space wasn't as I wish it would be, because I could not grasp what it is at all. But I mean, despite, you know, thinking of myself as a quite a technical person, and with the economics degree, I could understand how can some tokens, somebody issues some tokens and they all of a sudden become valuable and start being exchanged, and anybody can issue a token. So it was absolutely mind blowing. I said, well, it couldn't work. Well, I mean, I got a present from him. I got a physical Bitcoin with the address glued to it, and that I happened to cash out 5 years later. I hit a few $1,000, and yeah, obviously this was a good intro.
That is a good intro. The only physical coins I've gotten have been Bitcoin covered chocolates, none with addresses on them. Do you remember the day you decided to throw caution to the wind and leave the traditional world for the crypto world and start a business?
I don't remember the day, but I remember the feeling. The feeling was worrisome. It's you know, a feeling of uncertainty and the feeling of something new. So it was an excitement and worry at the same time. But as I got grip of what and how, and you know, reading more books and listening to smart people talk about why this will be the future, I've gotten very confident pretty quickly that it's the case. And regardless of what the people, the naysayers are propagating. It's not. I stuck to my belief, and we've seen that it's happening. The institutional adoption is happening. The retail sentiment becoming more educated and becoming more demanding at the same time. So we're seeing more adoption cases, more use cases. It's great. It's really encouraging, and where
here to stay, I think, at this point. I have one last question before I let Ryan close it out. I normally don't like to do this, but with you, I particularly want to hear this, because in 8 months from now, I'm going to review this. What is your price prediction for Bitcoin December 31st of this year?
December 31st. Well, I mean, again, if we look at I try to look at it from the sort of more statistical perspective or scientific perspective. We look at the past performance, although that's not a good thing to do. Generally, there's a 5 to 6 months after halving, we're going to be seeing some uptake. So I'm clearly positive that the price will go up from the current levels, and I think we could be at the range of 20 to 25,000.
So not 250,000 like some other people.
That's my gut feel. 250. I don't see this happening, to be frank.
Fair enough. All right, George, thank you very much for joining us today. Let us know where we can find you online and on social media.
Absolutely. Bequant.pro, bequant.io, safequant.io, and we're always on social media, and you can Google and search for Bequant.
Excellent. All right, great. Well, thanks again for joining us. It's been a great conversation, and we'll see you soon.
Thank you very much, George. Appreciate the time.
Thank you, guys.